What's going on, guys? Welcome back to another video. In today's lesson, we are going to be talking about 5 things that you must master in order to be a consistently profitable and successful trader overall, especially if you want to do this for a living or a side hustle. You need to master these 5 things at minimum. There are a lot of other skill sets you need to master, a lot of other rules you need to master, but these 5 things are absolutely critical and you cannot mess them up. They're things that you're going to want to work on consistently as you progress on your trading journey. If you are new here, my name is Nick Updike. I'm a full-time day trader, an entrepreneur, and a human performance enthusiast. I run a community called Driven Investors where we help day traders really realize their full potential and become the best traders that they can possibly become. So without further ado, let's dive into the lesson today, and I hope you all enjoy it. Alright, so 5 things you must master as a day trader. The first thing you need to do is you need to be hyper selective with the trade setups that you take. So when it comes to taking trades, you want to be as hyper selective as you possibly can, right? The better the setup, the higher the probability that it's going to work out in your favor. Now, everyone's trading strategies and their setups are different, right? So you need to find what your A+ setup looks like for you. And you can do this through backtesting, you do this through mentorship and finding good setups, and essentially experience, right? You're not going to know what setups work best for you until you practice taking those setups live. All right, so essentially you need to find what your edge or edges are in the market. So to do this, I did write out some questions that you need to answer before taking any trades, right? This is a trading plan. You need to have a trading plan, preferably before you even start the day, right? So the first one I wrote down is, why am I taking the trade and what is the setup? If you can't clearly explain why you're taking the trade in the first place, you probably shouldn't be taking the trade, right? Is it a failure to go higher, failure to go lower? Is there a pattern set up? Is it rejecting demand, supply? What is happening? Is it breaking out of a consolidation with high volume? What is the setup? What are you looking for to take the trade? You need to be able to answer that, beforehand, right? The next is, what is my risk to reward on the trade? So if you've been trading for a good amount of time, you know what risk to reward is. It's how much you're risking on the trade versus how much you're expecting to make on the trade. You want to have a good risk to reward. I would say at the bare minimum, 1-to-1, meaning you're risking $1 to make $1 if you're very consistent. I personally try to shoot for 1-to-2, meaning I'm risking $1 to make $2 on every trade setup that I take, right? So you need to know that beforehand. That also helps you figure out where you're going to take profit and where you're going to cut your losses, which we'll get into in a second. So the next one, where do I want to start taking profit? Again, that goes into the risk to reward. You want to have an idea of where you want to start trimming your contracts or even taking out, full size, right? Where/when do I plan on cutting my losses? This is going to be your exit strategy. You need to learn how to manage your risk. What are the current market conditions? Am I going with or against the overall trend? And on what time frames, right? So I personally like to look at the bigger picture first, see what we're doing on the weekly and the daily charts, and then I'll zoom into the 4-hour and the hourly chart. Is the market in a downtrend? Is it an uptrend? We're currently in a bear market, right? So I'm primarily focused on taking trades to the downside, but as many of you are aware, we do get those very strong moves up in a bear market. So you just have to understand where we are on a larger time frame and then where we are on a smaller time frame, especially if you're going to be scalping and day trading. So understand what the conditions are for the day and overall. Is the ticker relatively strong or weak in comparison to other names in the sector? So for me, if I'm trading, say, the upside, I want to look for names that are relatively strong in comparison to the overall market and other names in the sector. An example of this could be trading NVIDIA instead of trading AMD or MU or any of the other chip stocks because it has relative strength that day. Maybe it has a catalyst, maybe it was just lagging behind the other days. Whatever it is, I want to trade the names that are relatively strong or weak in comparison to the sector. So if the market's really weak, I want to look for names that are relatively weak in that are also in congruence with the market, right? Cool. So to continue with this, I have some rules where I will not take trades at all, right? The first one is if the market conditions are choppy or we're consolidating in a tight range, I will just stay away. I'll either walk away or I'll watch and see if anything breaks out or anything happens, but I will not force trades in bad conditions. The next is if there's really low volume, this typically happens before there's a Fed meeting or Biden speaking or Powell speaking or someone important is speaking or big news or market data is released, then I will not take a trade. I'll wait patiently, wait for the data to be released, and then play the volatility that typically follows those releases. Another important note is you really only need 1 to 2 great trades to have an amazing day, right? So why force trades that are maybe a B setup or they're not that good, take smaller size when the probability that you're going to be right is even less, right? I would just rather wait for an awesome setup that I can really put some money behind it and play that, right? So again, taking less than great setups are going to probably hurt you more in the long run than waiting for some really good A+ setups, sizing a little heavier, and really making your money work for you there. The next is this whole process of finding your trade setups. It starts pre-market, right? So I'm not going to do a whole entire thing on this, but I scan my watch list pre-market for gap ups, gap downs. I look at relative strength pre-market and then also from the day before and relative weakness, of course. And then I look to make sure if there's any news, catalyst for specific tickers or the overall market. And I look for tickers that are opening near critical demand or supply zones that I can play off of for failure to go higher or failure to go lower patterns. Okay, so those are just some notes. First thing, be hyper selective with your trade setups. Next, we're moving on to risk management. If you've been in this game long enough, you know that discipline and patience, it makes a great trader. If you're not disciplined and patient and you do not know how to manage your risk, keep your winners bigger than your losers, and cut your losses when you need to, you will not make it in this game. I promise you. I've been trading for 3 years very seriously now. The biggest issue I had my whole entire first year was risk management. I would do great for 5-6 days. I'd blow up on the 7th day, right? So risk management is really where it's at. You really need to get this tightened up and honed in. So with that being said, below are some ways that I personally mitigate risk. And the first one is I have a max loss for my individual trades as well as for the overall day. So for my individual trades, I really try not to lose more than $500. If I'm down more than $500 on a trade, it means that my trade setup is already invalidated and I should probably cut my loss, reevaluate the situation, look to either re-enter or stay away from that. And then for the day overall, usually $750 to $1,000. If I lose more than $750, unless I can see there's going to be a really good setup and opportunity for me to make back the money, I try to stay away because at that point, sometimes my emotions will get to me. I have to kind of feel it out. If I'm angry and I feel like I'm revenge trading or trying to overtrade, then I will typically walk away. But if I'm calm, I'm in a good space, and I can see that there's an opportunity for me to make some money back without forcing, then I will keep trading. So that's going to be dependent on you, how you're feeling, all that. But typically, $750 for the day, I'm just going to call it. The next thing is you need to have a clearly defined exit strategy, which I just mentioned on the last slide. This can either be a manual stop or a hard stop, but you need to have a place in your mind on the chart that you're looking at, and you're like, okay, I don't know, if this candle takes out the highs of this candle, I'm getting out. If it breaks this level, I'm getting out. If it reverses on me, I'm getting out here. Whatever it is for you, if it breaks VWAP, if it breaks the 9 EMA, there's a million different ways to do this, but make sure you have your risk reward, your trading plan, and your exit strategy and take profit planned out before you get in the trade. You don't want to be fumbling trying to figure it out, and all of a sudden you're like, damn, this is going against me. I'm not sure. Should I hold it? Should I not hold it? Is it going to reverse? Like, what is going on? Have a plan ahead of time. And more importantly, stick to the plan that you have already mapped out, okay? The next rule I have is if I have 3 big winning trades or 3 losing trades in a row, I'm probably going to walk away, right? I may walk away for the day. I may go for a run, go to the gym, and then come back and reevaluate, or I'll size down. So if I have 3 big winning trades in a row, the market conditions are still good, I'll actually size down, right? Because you start gaining you get a little euphoria, you get a little overconfident, you think that you can only have winning trades, and sometimes you do something stupid, right? It happens all the time. I see it in my students, I see it in myself. So I size down after big winning trades, or I walk away happy with my profits and I go on and live my life, right? The last one is if your emotions are too high, walk away. That's probably, out of all of them, besides having an exit strategy, the most important, man. If your emotions are really getting to you, you're angry, you're in fear, you have a lot of greed, whatever it is, you need to just take a minute, go have some water, go get some sun, go do something, and then come back, okay? That will save you a lot of money, I promise you. Too many times I've overtraded from emotions. The next one is position sizing, and this is always going to depend on the trader, how much experience you have, how much capital you have, all of that good stuff. But for me, I don't typically size the same on every single trade, right? Some people, they size the same on every trade and it works for them. It's consistent. But for me personally, I look at the grade of the setup. If the setup is A++, market conditions are great, the setup's good, we have relative strength, we're breaking out of a zone, like everything is coming together perfectly, I'm going to size my heaviest in a situation like that, as opposed to, say, maybe a choppy day where we get a breakout, right? Whatever it is, I'm going to size differently depending on the quality of the setup. So again, my size is typically predefined based on the quality of the setup, the market conditions, and my trading capital. So here's kind of how I grade my setups, right? An A+ setup plus a trending market equals my largest size. An A setup plus a slow or more choppy market, maybe it's consolidating or ranging, I'm going to go medium size. And then a B setup in a trending market, I'm going to go medium size. And then a B setup with a slow or choppy market, I'm either going to size small or I'm going to sit out. It really depends on the specific chart and what it's looking like. But for those, I'm either sitting out or going small and probably scalping, right? Boom. Now we're moving on to emotional intelligence. And I think a lot of traders don't put enough emphasis on the psychology of trading and how important it is to understand yourself as well as your emotions, right? You need to be very, very self-aware to be a great trader, right? So lack of self-awareness, discipline, and emotional control are the main reasons I see beginner traders fail, right? They don't know when to stop, when to go heavy, right? They just don't know when to fold them and when to hold them, okay? So the main thing to help with this is you need to practice paying attention and understanding to how you react emotionally in different trading situations. And the way you do this is really by reviewing your trades and asking questions, right? So I don't have my trading journal right here, but if you have a trading journal or something, I actually keep notes at my desk so I can write how I feel throughout the trading session. How did I feel before the trade? How did I feel during the trade? And how did I feel after? Was I really nervous to take the setup? Was the setup good? Was I experiencing a lot of fear? Maybe I was experiencing greed. There's all kinds of emotions you can experience before, during, and afterwards. And based on those emotions, you can see how they impacted the decisions that you were making that led up to the trades and the actions you took, essentially. So here's some questions I want you guys to ask yourself and that you can journal about. So when do you feel fear? When do you feel fear in the market and when you're trading? And then how does this fear impact your trading? When do you feel anger or rage? How does it impact your trading? When do you feel greed or euphoria, and how does it impact your trading? Right? And like I just said, I highly recommend taking notes in your trading journal throughout the trading day. Just jot down how you felt before taking a trade, during, and after, and you're going to start to recognize patterns that will help you improve your trading psychology and understand your emotional cycles and how to make adjustments. You can only understand this by practicing it. It's like a muscle. You go to the gym, you work out, you get stronger. Same with this. You review your trades. You see what you're doing wrong. You see what you're doing good. You see how you feel in different situations. And then you're more aware for the next time that same situation arises. Okay? So the emotions listed above typically only lead to trading errors such as overtrading, revenge trading, exiting too early, sizing up or sizing down, sloppy risk management, overconfidence, taking bad setups, etc. So if you're experiencing these emotions, whether they're really good or really bad, not many positive things can come out of it. Okay, so I want you guys to really focus on this. I'm telling you, if you can get your mental down and your emotional down, you are going to be a huge step ahead of most of the average retail traders. Cool. The next one is backtesting and trade journaling. I did mention this before, but I want you all to get in the habit of reviewing your trades every single day. It's a meticulous thing I do every day. I go through on TradeZella, shout out Umar, an amazing platform. It gives you all the analytics that you could possibly need for all your setups. You can see all the little issues you're having, what you need to tweak, what you need to pay more attention to, what setups are doing really good for you. So it's great for helping find your edge. What setups are not so good. When you're trading emotionally, did you give back money? Could you have maximized your profits more? All of those things. I highly suggest getting a good trade software. I've used TraderSync before, but TradeZella is really the go-to one. It's the best one on the market by far. And then having your little handwritten journal as well. Okay, so getting in the habit of doing this helps you build conviction in your trade setups and your edge. You get to learn which setups you take that are most successful, and this ultimately results in more confidence to enter and hold positions without fear or hesitation. A lot of the issues when you're first starting is you're just not certain of your setups. You're not certain of when to cut, when to hold, when to take profit, all those things. And it comes with experience and confidence. And the only way to gain confidence and experience is to do it and then backtest and see what's actually working. That builds confidence. When I enter a trade, I have confidence that it's going to work. And I also have confidence that if it doesn't go as planned, I can manage my risk and cut my losses where they need to be. And that comes over time by doing the right things. Okay? Cool. So the next one is learn from your mistakes. It helps you spot unhealthy habits and patterns you have that are costing you money. And you get to see which mistakes you most commonly make and when/where you make them. So essentially, this is what you need to focus on improving. Very, very important analytics for you to know, right? Lastly, it helps you cross-reference your trade with your journal to see how your emotions impacted your trade execution. So if I go on there and I'm reviewing a Tesla trade and I'm like, damn, why the heck would I enter that? Like, it's not a typical setup I would enter. I didn't really have a game plan. What was going on in my head? Pull up my trade journal. I already wrote about it earlier, so I know, all right, I just came off a loss. I was eager to make money back. My emotions were a bit high, and I forced the trade, right? It wasn't a good setup. It wasn't a good trade. I forced it because of emotions. So when you cross-reference what your analytics say, as well as what you wrote off the top of your head and what you were feeling in your trading journal, it makes a really big difference, and you can write up a really good summary for you to review for the week to come. And I don't even mention this in the presentation, but something I do every single week is I do a full weekly review, how I traded, what I need to focus on, what I need to work on, and I reread it the Monday morning before I start trading for the week. So it's all fresh in my mind. I don't make the same mistakes, and if I do, at least it's at the top of my head, right? So if I go to size up in a position I shouldn't, and I have notes right in front of me that I already read that's like, last week you sized up at the wrong time, 3 days in a row or something, then I'm not going to probably do the same thing. If I didn't manage my risk good last week and it's at the top of my head to actually focus on managing my risk, I'm probably not going to do it. Or if I do, then it's going to be a conscious decision I made to break those rules, right? But if you don't do it and you're not aware of it, you're way more likely to continue making the same mistakes. The last one is just monitor your progress and build consistency, right? It helps you see, which months were good, which ones were bad, and you can really monitor your progress as a trader, right? Because in trading, the thing is it's not going to be linear progression, right? It's not going to be like you make 5K, then 10K, then 20K, then 30K. You're going to have your ups and downs, but what matters is how you're progressing in following your rules, in taking the right setups, in managing your risk, in controlling your emotions, right? So that's how I monitor my progress personally, and that's what I focus on in regards to the analytics, is not necessarily how much money I make, but how well I do at following my rules and being a better trader. Cool. The last one I have for you guys is you need to learn how to lose, right? So this is one of the very few skill sets, unless you're a weatherman or a baseball player or something that you can be wrong in a lot, that you can lose consistently and still come out the other side very profitable, right? You can still be a winner by losing a lot. So you need to accept this fact and learn how to be resilient as hell and have a short memory, right? So as a trader, you can't allow your bad trading days to define you and spill over into the following days or weeks. And this can especially be difficult if you're someone who trades for a living or finds their self-worth through money or success. The reason being is because you have a bad day and you need that money to pay your rent, you need it to take care of your children, whatever it is, it's going to have naturally a bigger impact on you when you have big losing days, right? But the thing is with trading is if you allow those losing days, which are inevitable, to impact you badly emotionally, it's going to cause a lot of issues in other areas of your life and mentally, right? So I would go as far as saying trading is one of the most mentally taxing skill sets or jobs or business, whatever you want to call it, that there are, right? So you really need to make your mental health a top priority if you're going to be trading for a living or trading even as a side hustle, right? You do not want it to impact the other areas of your life, your relationships, your mental and emotional health, your physical health, all those things. So I actually make sure these other areas of my life are rock solid, and I remember that trading is just a job, right? It's just a business. I can show up every day and do my best, work on improving, but if I have a losing day, it's a part of the game, right? It's a part of the game. It happens, so try not to let it impact you for the next day, the next week, the next month, right? You got to be able to bounce back really fast. You got to be resilient, and you got to move forward. So some tips for this is, number one is for everything in life, cultivate a growth mindset, right? Remember that every failure is an opportunity for growth. It doesn't mean that you suck. It doesn't mean your life's over. It doesn't mean you should quit trading. It just means you messed up, right? Everyone messes up. We're all human here. So if you mess up, look at it, look at in depth what you did wrong and how you can fix it and how you can do better next time. That's what you got to do. And like I said, this applies for really everything in life, especially if you're starting a new skill. So if you're a beginner and you're just getting started on this, focus on your mindset first. Focus on your mindset, and everything else will be so much easier as you learn the setups and the strategies, right? Next is mentally separate trading from your personal life. I pretty much just went over this. Treat trading as a job or business and treat it as such, and you will live a happier, healthier, and overall more successful life, and that is the freaking truth. Alright, so that's pretty much all I have in this video today. If you enjoyed it, please consider sharing it with a friend, liking, commenting, subscribing, all that stuff. And I have some really exciting videos that I'm going to be sharing with you guys. Some more technical stuff as well with actual setups that I look for and some strategies. So again, I hope you all like this. I hope I provide you some value. Please let me know below what your favorite takeaway from the video was, and I'll see you on the next one. Peace, guys.